What's up, deal makers? If you're new to investing in the global stock market, I highly recommend that you keep it simple and invest in the long term. So, in this video, we're going to talk about 7 ways where you can invest passively in the global stock market, even if you're completely new. These strategies don't take a lot of time, money, or knowledge, which is perfect for someone who's just a beginner. Are you ready? Let's begin. When investing long term, don't think about the timing of your purchases. Instead, just make a commitment to invest regularly through cost averaging. This means you invest the same amount each month. This is proven to be very effective and doesn't take time because you don't need to do research or read any stock charts. You can do this for as low as $50 per month. So, what do you invest in? Well, first, you can invest in index funds. John Bogle, the founder of Vanguard Group, created the first index fund. An index fund just tracks a market index like the PSE index, the S&P 500, or the Nasdaq 100. In John's book, The Little Book of Common Sense Investing, he said that 80% of actively managed funds underperformed the general market because of high expenses and over trading. It's also very hard to time the market. Sometimes the fund manager buys when he should be selling and he sells when he should be buying. If market professionals find it hard to do, most amateur investors will also have difficulty doing that. So if you're an amateur investor, it's much better to just do cost averaging of index funds. Just invest the same amount in index funds every month. Here are some index funds that you can invest in. The Vanguard Total Market Index, the Spider S&P 500 Index, the Invesco QQQ Nasdaq 100 Index. If you're from the Philippines, I would recommend that you diversify globally and invest in global index funds also. You can see from the chart the performance of the Philippine index, which is right here, at only 3.71% for the past 5 years. Against the S&P 500, the S&P 500 made more than 100% in the past 5 years, and the Nasdaq 100 made more than 200% in the past 5 years. So if you like to make more money without doing a lot of work, just do cost averaging of index funds. That's the first way, passive investing in index funds. The second way to passively invest in the global markets is to invest in active ETFs. Now, why would I recommend this when I just said that 80% of fund managers don't beat the general market? Well, what you need to do is to find the 20% that do beat the market and invest with them. One fund manager who has done really well investing in innovative tech companies is Kathy Wood of ARK Invest. Her actively managed funds in ARK Invest have done extremely well, especially these last 5 years. Her investment philosophy is rooted in technological innovation. You can see the performance of Kathy Wood's ARK Invest in this chart, outperforming the index funds that we mentioned earlier, the PSE, the S&P 500, and the Nasdaq, while the ARK Innovation Fund made more than 800% in the past 5 years. These are the ARK Invest ETFs that you can buy. ARK K, the flagship ARK Innovation Fund, ARK W, the next generation Internet ETF, ARK F for FinTech Revolution, ARK Q for Autonomous Technology and Robotics, and ARK G for Genomics Revolution. If you like any of these investment themes, you can invest in that ETF through cost averaging. Every month, you just buy one or more ARK Invest ETFs or any other ETFs that you can find. That's the second way, passive investing in the stock market through active ETFs. The third passive investing method is through growth investing. This is where you make your own stock picks. If you have time to study the market or you're willing to invest in stock advisory services, you can definitely build your own ETF. You can also subscribe to this channel to get growth stock picks for free. I analyze 2 to 3 stocks per week. I mentioned earlier that it's hard to pick stocks. The good news is today we already have zero commission trading platforms, thus removing the danger of losing capital from over trading. Before, capital was lost through trading losses and high commissions. With zero commission platforms, the danger of over trading is lessened. It's still hard to time the market, so you just invest long term through cost averaging on companies that are likely to have long term growth. That's growth investing. This is the method that David Gardner teaches. David is the co founder of The Motley Fool. They run a stock advisory service called The Motley Fool Stock Advisor, and they give recommendations on growth stocks that you can invest in. He recommended Amazon and Netflix before they became the giants that they are now. Investing in either one when David recommended them would have made you more than 100 times your money. The stock advisor's portfolio has also outperformed the market tremendously. $10,000 invested in stock advisor in 2002 would now be worth more than $200,000, a 20x growth. So again, you can do monthly cost averaging on long-term growth stocks. That's the third method, passive investing in growth stocks. The next way has made secretaries and janitors into millionaires. Now, investing in companies with consistent dividend growth. Grace Groner was a secretary who invested $180 in Abbott Laboratories in the 1930s. Now, Abbott split their stock many times. Her three shares grew to hundreds, then thousands over time. The more shares she got, the more dividends she received. Then all the dividends she would get, she would reinvest and buy more Abbott shares. She did this for 75 years, and her portfolio grew to $9 million. Not bad for a secretary. Ronald Reed also followed this model, but he invested in more than one stock. Ronald was a high school graduate and a former gas station attendant, mechanic, and janitor. One of his employers said he only had two skills that he was really good at: cutting wood and picking stocks. He would read the Wall Street Journal in the local library and invest in stocks like Colgate-Palmolive, Procter& and Gamble, Johnson& and Johnson, and General Electric. Following the same method, he was able to build an $8 million portfolio. Where can you find dividend-paying stocks to buy? You can check out the members of the S&P 500 Dividend Aristocrats Index. These are companies that have consistently given shareholders increasing dividends for the past 25 years. They have never missed a beat. The advantage of this method is you get regular dividends on a monthly or quarterly basis. Use those dividends to buy more shares and compound your growth. Once you're ready to retire, you can stop buying more shares and just live off the dividends. In this chart, you can see the S&P 500 Dividend Aristocrats Index outperforming the S&P 500 index. That's the fourth method, passive investing in dividend growth stocks. If you like these methods so far, make sure to smash the like button for the YouTube algorithm. This helps the channel grow and it helps YouTube share this video to more people. The fifth passive investing method is called copy trading. Etoro has a copy trading feature, but this method was actually invented many years ago, before the internet was mainstream, by another secretary, Sylvia Bloom. Sylvia knew nothing about stock trading, but her boss, a Wall Street corporate lawyer, knew more and had access to important information, So whenever her boss would tell her to make a trade, she would copy the exact trade at a lower amount. She was able to do this because this was a time when secretaries did everything for their bosses. So even though Sylvia knew little about the stocks she was buying, just by copying her boss, she was able to build an $8 million portfolio. Now, because of fintech, you can do copy trading the Sylvia Bloom way using eToro's copy trading. Just choose an investor that you'd like to copy and put in the amount, and you're done. You can add funds every month, and every time your investor makes a trade, you will copy the same trade. You can browse through eToro's lineup of popular investors or copy people you know. The great thing is you can see their historical performance and their current holdings. I have an eToro public profile, and you're definitely free to copy me. I love this because outside eToro, you have gurus or experts who can just claim to be great traders and show photoshopped results. But with eToro, everything is transparent. Two popular investors that you can check in eToro are Jep Kirk Bond and J. Edward Smith. Jep Kirk Bond made 45.55% in 2019, 36.8% in 2020, and in 2021, he has so far made 15.96%. You can see this performance chart of Jep Kirk Bond. You can see him outperforming the S&P 500 and just matching, almost matching the NASDAQ 100 index. J. Edward Smith, on the other hand, made 52.32% in 2019, 103.51% in 2020, and 23.42% year to date in 2021. You can see Jay's performance in this chart, and you can see him massively outperforming the S&P 500 and the NASDAQ 100 index. There is no fee to copy a trader, but there's a minimum amount of $200. That's the fifth method, passive investing through eToro's copy trading. The sixth passive investing method is through eToro's copy portfolio. With copy portfolio, you copy a basket of stocks built by the eToro team or by machine learning. There are many themes to choose from: cryptocurrency, vaccine med, outsmart the NASDAQ, e-commerce, etc., etc. There are no fees to copy a portfolio, but there's a minimum amount of $1,000. That's the sixth method, passive investing through eToro's copy portfolio. The last method is through a combination of any of the six methods. You're not limited to strictly following just one method. You can mix and match according to your preference. You can invest 80% of your funds in index funds, then 20% in ARK Invest, or you can invest 50% in ARK Invest and 50% by copying three traders in eToro, or you can invest 60% in index funds and the rest in long-term growth stocks. It's all up to you. So there you go. Those are the 7 ways to passively invest in the global stock market for beginners. You can invest in index funds, actively traded ETFs, growth stocks, dividend growth stocks, copy trading, copy portfolio, or any combination of the six. If you're from outside the US, I recommend using eToro for long-term cost averaging. eToro offers zero commission trades and low-cost funding options, making it the best option for long-term cost averaging. Plus, you'll get a $50 bonus when you open an account using my link below. Use that $50 to buy more shares. I hope you like this video, and remember to smash the like button for the YouTube algorithm so more people can watch this, and this also helps the channel grow. If you want more videos like this, hit subscribe and click the notification bell to be notified when new videos are posted on the channel. If you want to know more about eToro and you're Filipino, Watch the video on how to invest in the US stock market from the Philippines. If you want my latest ideas on stocks to buy, check out the playlist on best stocks to buy in 2021. I hope you start making deals in the global stock market. Choose from any of the 7 methods to make deals and grow rich. And may all of your deals push through. See you in the next video.